Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 10th of October 2024. So following the CPI data, we saw an initial rally in the US dollar before it was sold because of weakness in today's other data, namely the jobless claims figure, which came in at 258. That was a 13-month high compared to 231. That was unexpected. The inflation data was stronger, but because the Fed's focus is no longer on rising prices, the market is paying less attention to inflation data, and it really needed to be quite strong to trigger a major rally in the dollar, which wasn't the case really. But with rising oil prices and geopolitical tensions in the Middle East, that could change in the months ahead, who knows. But for now, the focus remains firmly fixated on the jobs market, which is why we've seen a bigger reaction to the unemployment claims miss than we did in the CPI beat. So where do we go from here? Well, I think the path of least resistance on the euro dollar certainly remains to the downside for the time being. At the moment, it's testing this area of potential resistance at around 109.50 to 109.60. This level had provided support for a few days before we broke down below it on Wednesday rather, and now we are retesting that area, and it's so far holding firm. If it closes below this area, then the next downside target could well be 109, followed by the 200-day moving average, which comes in at 108.75. However, if we close above this shaded region, then in that case we could see the onset of a short squeeze rally to at least the 110 area, if not higher. US equity markets remain supported for the time being. Yesterday, the S&P 500 hit a new record high after breaking out of this consolidation pattern to the upside, breaking several resistance levels and breaking its prior all-time high at 5,773. That level is important. We need to see the index hold above that level now on a daily closing basis to keep this rally intact. However, the line in the sand for me now is the shaded region on the chart. If we close below this area in the coming days, then that could pave the way for a potential drop to 5,500 initially, and potentially even to the 200-day moving average, which is miles away from where we are at the moment. But we'll cross that bridge if and when we get there. For now, the market's making higher highs and higher lows, and keep an eye on this level right here at 5,773. The Nasdaq is also showing a similar picture. However, it's yet to create a all-time high. The July high comes in at 20,759, and the market is potentially trying to get there in the next few sessions by the looks of it. But the key level to watch today on the Nasdaq is the 20,000 level, which was previously support and resistance, and it is a psychologically important level. It also marks the low point from yesterday's range. So if we go below this level, then that could potentially pave the way for a deeper pullback towards the shaded region, and if we were to break below that area in the coming days, then that could lead to a sharp sell-off, potentially leading to a drop to the 200-day moving average, which is this blue line here. Now, given the Middle East situation, it's worth keeping an eye on oil prices. Yesterday sold off, but it has bounced right where it needed to, finding good support at around 75.10 area, which was previously resistance, as you can see over here, before bouncing back. Today, it is above the high of yesterday's range, which comes in at just under the $78 handle. This level is now going to be the short-term support level to watch. And for as long as we maintain above this area, the path of least resistance remains to the upside. And therefore, there's the potential for oil to potentially take out the high from last week, or earlier this week rather. What was that high? At 81.15, and test the 200-day moving average. Could we get there by the end of this week? It's quite possible if the situation between Iran and Israel gets even worse. We could well see oil prices go much higher than that as concerns about supply increase. For more market insights, make sure to check out the news and analysis section at cityindex.com. See you in the next video. Take care.